Hello, it's Mark Barrett here from Property Tax Advice, and as you can see today, specifically I'm talking on behalf of our company, Expat Tax Advice. This is one of the videos that we're preparing in the sequence of you ask and we answer. So we put an opportunity on social media for you to ask questions and we'll answer them. So this question has come in and I'll read it for you. I'll be asking you to explain how I can avoid paying income tax on my rental income if I was to move abroad. Thank you. I'm going to answer the question both with regard to income tax, which implies therefore you're owning the property in your own name, but also from company, so corporation tax. The underlying message for both taxes, income tax and corporation tax, is you're not going to avoid it. If you're moving abroad, that's fine. We have what's known as the double taxation treaties with pretty much every country in the world. And if we don't, still doesn't matter, because what happens with the double taxation treaty, and in the absence of a DTT, it happens automatically within the UK anyway, is that the country where the property is situated, so where the land is, so in this case, the United Kingdom, has the prior right to taxation. So Britain has the right to tax income from the land in Britain. Okay. So the UK will tax it. Regardless of where you are in the world, you can live in a tax haven. We have a lot of our clients in tax havens, Saudi, UAE, etc. If you own a property in the UK, you will still pay tax in the UK. Now we get to some detail. If it's on income tax, you're taxed on your profits, not on your income. So you're taxed on your profits. If your profits are not that high, you've still got personal allowance. So £12,500 approximately. And obviously, depending on when you're watching this video, that number may change, but the government has frozen it for quite a while now. So you can earn profit and not pay tax. So maybe if you don't have a lot of profit, you've only got one property, for example, yeah, you won't be paying income tax because you've got your tax allowance to use up. When you go above that, yes, you are paying 20% tax all the way up to the higher rate threshold. Conversely, for a company, you'll be paying corporation tax 19%, rising all the way up to 25%, subject to how much tax you've got to pay. The country in which you're situated, England, Britain, has the right to tax it, regardless whereabouts you live in the world. Obviously, if you're going to be moving abroad, and coincidentally, as that question was asked, I had an email in from someone who's about to move to Thailand, so hopefully I'll get this video prepared and ready for publishing. I will send it to him as well. Maybe it helps answer his question. If you're going abroad, you have to register as a non-resident landlord, which basically means you've got to file a tax return. If you don't register for a non-resident landlord, your tenant or your agent or whoever has to deduct 20% of the income and pay that over to the taxman. So basically, you're going to get smacked if you don't register, because if you register, you pay 20% on your profits. If you don't register, you pay 20% of your income. So yes, you will register for non-resident landlord. And then you just file your tax return, but the tax isn't that high, realistically. If you look at the schedule of all the different countries in the developed world, Britain has actually got a reasonably low tax rate compared to many others. So there's the answer to the question. How can I avoid paying income tax? If you move abroad, how can you avoid paying income tax on the properties in this country? Sorry, you're not going to. If you do need any help, come back to us at Property Tax Advice or Expat Tax Advice, and hopefully this video was useful to you. Thank you. Bye.